Okay, what's up, Tycoon? Super excited for today's video. We're going to look at NNDM, okay, Nanodimension. This one has been requested many times in the comment section, so I'm going to go ahead and drop the viewer request. Make sure to remember I do those viewer requests every week, so if you have any requests, make sure to let me know in the comments, and I'll be happy to get to it as soon as I can. It seems that popular YouTuber Meet Kevin apparently has bought into NNDM, and maybe that's why I'm getting so many requests here as of recent. But from my last video on it, not much has changed. Okay, the company is 100% undervalued. If you look at how much cash they have on hand, their market cap is much lower than that. Okay, this is trading at around about $600 million worth of market cap. It has 1.3 billion, or at least 1 billion in cash here recently. Okay, so I'm going to cover all of that. We're going to go over the chart patterns. We're going to go over the buy zone. Okay, I established this buy zone in my last update video. We have hit it. And this stock is down over 80%, 80 to 90% in this bear market. We have seen plenty of stocks just get absolutely crushed and obliterated. Some of it is due, right? Some things were very overvalued, and some things are just, seeing a result of this massive market drop. And you have to look for these gems. Okay. So we're actually, before we dive into the chart, all right, we're going to go over here. We're going to look at a few things online. Okay, so NNDM announced a dramatic increase in its quarterly revenue with its Q2 2022 financial results. Okay, over the quarter, they generated 11.1 million in revenue, over 1,000% more during Q2 of 2021. So that's a very, very big rise. Okay, and then they had a 6.7% rise from Q1. All right. And most of this is coming from these things right here. And they've been acquiring a lot. Okay. You can see right here, the CEO says it's generally frugal approach to cash management during the last 2 years of market inflation has now positioned it to capitalize on new arising opportunities. And that's what they've been doing. Okay. Is they've been making some purchases, and this can work out really well for them, or it may not. Okay. So you have to keep that in mind. You can go ahead and read some more into here, but they are really looking to really make the best out of this. Okay, and if they do survive this bear market, there's a potential that we could see some very, very nice gains. Okay, they bought Admatech and Formatech in a deal worth 12.9 million. Right, as you can see right here. All right, and they bought 12.12% of Stratasys, which you can go on here to, they talk about the poison pill. A lot of people heard about that with the Elon Musk Twitter deal. All right, but we're going to go over here to alphaspread.com actually, and we're going to look at the market intrinsic value. Okay, so there's two types of investors, really. All right, you have value investors and you have some speculative investors, right? Warren Buffett is most famous for being one of the most famous value investors there are. Okay, and currently the base case, all right, has NNDM undervalued by about 36%. All right, so you can come in here and look a little bit more. Not everything is a green light on here. Okay, you look at their profitability score, it's not too good. Okay, they have a 33 profitability score. All right, but their solvency is pretty nice. All right, they have a 75 solvency score, and you can see the Wall Street price targets. Okay, over the next 12 months. Look at the potential here, right? They're saying that it has a potential to go up to $10. Okay, that's a 313% upside. All right. Now, some people don't really pay attention to these Wall Street analysts. Some people do. Okay, I'm just here to present you guys with some info on it before we dive into the chart. Okay, let's go ahead and look at simplywallstreet.com. All right, and this is going to show you guys some of the less bullish things. Okay, because we just went over how it's undervalued, how Wall Street has all of these bullish price targets on it. But we need to look at some of the other things. Okay, this is really where it's only standing well is the financial health. Okay, because they have manageable debt and they have a lot of cash on hand. And as I said earlier, you can see here their market cap is about 600 million, and we'll go into how the market cap is trading than the actual cash equivalents that they have on the company. Okay. So we'll look over here. Oh, I wanted to highlight this too. Okay, 3D printing stocks have been around for a while. Okay, earnings have declined on this stock in particular over the past years by about 65%. All right. So it's not like, 3D stocks or 3D printers are like some brand new thing. They've been around. People been saying that they were going to take over the world, and it kind of never happened, right? There was a nice big rally. I mean, we saw that this thing had highs of 17, 18 on the chart. And, those are really nice, but they haven't taken off the way that people really think they have. All right. In the past 52 weeks, it's down about 57%. Along with most of the market. Again, it is a very, very painful bear market that we are in right now. The price to sales ratio is a little bit high. Okay. So the price to sales ratio is about 20. 20.4. All right, that's what we're looking at there. We come down to here. All right, and let me find the info that I'm looking to show you guys. Okay, looking for the cash on hand real quick, and we can see it's somewhere on here. It's about 1.3 billion. Okay, the last time they looked at it, it's going to be right here. Okay, so they have 1.3 billion dollars in short-term assets compared to, its short-term liabilities of 34 million, and then the long-term liabilities of 16 million. So those are really good numbers right here, and this is where this company stands out, and this is why this company is getting lots of attention, because the market cap is 600 million, and they literally have 1.3 billion in, short-term assets. Okay, so that's a big move, for it to be trading almost, half off of what its actual assets are on the financial statements. Okay. So, that's some of the things we went over. All right. There's no dividends, no dividend yield. We went over how, some of the profits weren't the best. The price to sales ratio isn't the best. But let's go ahead and dive into the chart now and really take a look, okay, at what my analysis is going to bring. All right. So here's those highs of 17, 18 that I was speaking of. And we've seen a very dramatic fall. Okay, this thing is bleeding, trading under $3. It's about 243 at the moment, and again, we are in the buy zone that I was highlighting. Okay, now this does not mean throw all your money and YOLO into this, because this bear market has much more to go. Okay, the S&P 500 and the Nasdaq, while we may see some short-term rallies, we do have more pain coming in the market, at least till November. Okay, November is when I'm looking for a potential bottom. So in my opinion, this is a buy zone where you start to accumulate. Okay, you start to accumulate slowly. You don't go all in just because we fell below 332. Okay, we can definitely still drop all the way down to 134, but we do have a nice bullish pattern forming. Okay, and this pattern is known as the descending wedge. And what you're going to see is you're going to see the price action zigzag through here until you have a breakout near the top of where this pattern starts. Okay, and that's up about $8. Well, where did the Wall Street analysts have it going to over the next 12 months? They had it going here to about $10. Okay, so I'm seeing something similar on technical analysis, not even looking at the fundamentals. From a technical perspective, I can clearly see this running up to $8, potentially $10 in the future. All right, now remember, none of this is financial advice, just a viewer request breaking it down for you guys. The second thing that we have that's bullish is this right here. This is a low, this is a lower low, and then this is a lower low. Notice how we're continuing this trend of lower lows, right? Low, low, low. We're getting very low on here. Look at our relative strength index. It's actually going up. We have a low, low, and a higher low. This is what's known as bullish divergence. When you're seeing a divergence between the price action of the stock and a divergence between the price action of the RSI. Okay. So what this means is that there's potential for a bullish pop in here. Okay. If we look at the first form of the bullish divergence right here, okay, that's when we created the initial low and higher low. All right, let's go ahead and take a look at that rally there. Okay, from the lows to the highs, that was a 76% move that you could have spotted off of the bullish divergence. Okay, so this doesn't mean that very soon we have to pop. Okay, because this can drop down to retest that trend line. That would be a much better entry, in my opinion. All right, is, we got the rejection up here. We may continue heading a little bit lower. And as we do, we want to look for the weekly chart on the RSI to see if we're going to be able to hold this trend line and bounce here and continue back up. All right. But right now, okay, the pattern that I'm seeing is an inverse cup and handle. All right. If we break this pattern and we break this line right here, most likely we're going to head back down towards this 134 area over here. And if we break that 134, then our next support level would be all the way down at 51 cents. And this does align with the descending wedge. It could take us, below 134 and down to 51 cents. But if you're in this for the long run and you're buying this because it's undervalued, because it has intrinsic value, and also because the cash equivalence is higher than the actual market cap, then you shouldn't be too worried about short-term pain. Okay, you should be looking to establish price levels that you are comfortable buying at and holding for the long term until things start to balance themselves out. Okay, it may take a year, it may take 6 months, it may take 2 years or more for this imbalance to actually finally play out. All right, but these are all the key levels that I'm watching. It's 332, it's 134, and it's 51 cents. Feel free to slowly start to accumulate in this area, and save some cash for the downside just in case we do break 134 and try to come back down to 51. We can see 51 is the 3-year lows right here, and it didn't really trade in this area very long, right? We look at 2019, 2020. It stayed in this area for a very short period of time before rallying massively. Okay, so we may see that happen again in the future. Nothing is guaranteed, but I do like this descending wedge along with the bullish divergence. That's two bullish indicators that we may see bullish activity in the future. The main question is just when, right? And then we also went over some of the fundamentals. Okay, we went to Seeking Alpha. We looked at Simply Wall Street. We read into some of the numbers. We read a little bit of an article about how their Q2 sales are up over 1,000% in the past year, how they've been stacking this cash, and with inflation, now they are in a position to make some more purchases on top of the purchases that they've already made, to maybe acquire some other companies, maybe acquire some other new business deals that can potentially help this stock out in the future. All right, so I really appreciate you guys watching the video. If you did like it, don't forget to hit the like button. All right, subscribe, and make sure to let me know what stock you want to see in the next video. All right, I do those viewer requests every week. This was one of them, and with that being said, I'm out.